Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, today before the New Year's Day I think that we could take a look at Japanese yen and update our view, because situation here is developing a bit different compared to what we expected initially, although nothing drastic has happened yet. So if you remember, on the euro currency we are waiting for a hitting of the 119.70 target, so it stands a few pips higher than the market stands right now, and this action suggests some minor continuation before some reaction maybe will happen, maybe retracement, something of that sort. And approximately the same story we have on Japanese yen. So our major patterns, guys, stand at 2 points. First one is here. If you remember, according to our weekly research that we have prepared in Christmas weekend, here we have the monthly stop grabber, here we have the daily, and in general this consolidation that reminds the triangle. You can see actually market forms here some kind of the pennant pattern, so it not as visible here as on the weekly chart. So on the weekly chart it looks a bit more clear. Some kind of the pennant pattern is forming. On the daily chart it looks like the triangle. So in here, inside of this triangle on the weekly chart, we also have multiple grabbers that suggest all these patterns are bullish and they suggest the upward continuation. So that's why deeper retracement initially was not quite expectable, let's call it in this manner. So we thought that initially that maybe minor retracement will happen, that lets opportunity go along, and then market should continue move higher. But as we see some significant drop on the United States dollar, you can see reaction across the board, and when the euro has started to rally, Japanese yen for some time still was standing, but as the rally has taken the acceleration, we also saw the reaction on the Japanese yen as well, so it also has dropped. Still, as you can see, this reaction still should be treated as a retracement because major pattern here is still valid. This grabber is still valid, and today, guys, market is coming to the level that will be extremely important for a short-term period. Currently, market has not passed through the red line yet, and still keeping the bullish setup here. The validity of the grabber and also the ABCD pattern that exists here. So if you remember, our minimum target stands slightly above the B point as the COP target, contraction objective point for this ABCD pattern. So what we have on the 4-hour time frame chart. On the 4-hour time frame chart, you can see precisely this ABCD pattern in the target 1382. That should be met by this action. And currently, guys, so when the rally on the euro just has started, market was here, and it was just some hope that maybe euro will turn to flat, and after that, some action could start. But as I said, then yen also has shown the reaction, and market has dropped. Right now, market is coming to the major support, because to the downside, market will complete this ABC top XOP target, 1618 extension, creates the agreement with the 1263 to 1264 fib level support, and take a look, this will be also the weekly pivot support one. So here we have two different indicators of the validity of the bullish trend. Why? Because we know that by the framework of the pivot points, that weekly pivot support one should hold any retracement while bullish trend is valid. So if market will break through this area, it will tell us that this grabber that we have on the daily chart probably will be erased, and overall construction with the moving to this target probably also will be destroyed. Besides, action below the normal retracement prior the hitting of the minimum target, because this is actually minimum target, guys, for this ABCD, just 618 extension, and it has not been met yet. So dropping below some reasonable retracement level and I think that the major levels are reasonable. The break in strong weekly pivot support, one break in strong agreement support stands a bit in contradiction to the idea of the minimum target. So minimum target should be met with minimum deviations. So market should not show some really collapse before the hitting of the major target. So any weakness here in this area will put the shadow on the upside perspectives. And this level, in fact, is ultimate retracement for the market, because retracement deeper than the 618 in the normal development of the ABCD action, it's not quite reasonable. That's why this area will be very important. So if market will break it down, it will tell us that the chance on the downward continuation will increase, because this breakout will be irrational for a construction that we have here with this ABCD, with the grabber that we have at this point. So that's why we need to keep an eye on the 112.50 area. Besides, on the hourly chart, guys, market is making some preparation to this level. So take a look. Here you have the reason why we thought that retracement should start. That's our regardless cheaper to sell, and as you can see, it works perfect. So those who have taken short probably should be happy at this point. Now market, take a look, forming some kind of the bullish reversal pattern. It has not quite clear shape with these spikes and something of that sort, but still an extension could be treated as some kind of the butterfly. And take a look, that this 127 target stand 1256, 1618 target stand 1245. Both of these targets envelop this fib level and 1250 support. So now what we have actually, we have bullish reversal pattern, it's butterfly buy, that is forming right at the final target, final extension, XOP target of the ABCD action, right at the strong agreement, and in general it's at its strong support. So what else we need? Actually, this is market has done everything to make the preparation for a possible bullish reversal, and that's why this level is particularly important, because as you can see, all preparation is done. If market will not reverse up, this should lead us to corresponding conclusions that probably we will not get any reversal here. In fact, guys, even here we could treat it a bit in different manner. For example, you could say that we have here Garters triple 2 buy patterns also, and this in general agrees with the idea on the euro currency, because on the euro we also expect some a bit stronger action to the upside, which means that on the euro currency, on the Japanese yen market, indeed could move slightly lower. So, and after that, some reaction will be at least I think that maybe some retracement should happen here. So that's why I think that relatively safe trying to take in the long position here. But do not forget, move your stop to the break even at the first possibility. If market will move higher, I don't know, maybe for the 25-30 pips, you could try to move your stop to the break even here to protect your position. Because if even we will be wrong and market after that will continue dropping, and the chances really exist, because you probably remember our thoughts on the euro currency that we have discussed yesterday. If even this will happen, some respect to this area probably should happen, because it's really rather strong support, and that will give us an advantage. That will give us opportunity to move our stop to the break-even and then just see what will happen. If we will be right, market will skyrocket to the upside. Well, that's great. If not, well, we will exit with the break-even or even with some minor profit. So let's keep watching what will happen here on the Japanese yen. As I said, currency here is approaching to the red line, to the major point.